Hello traders, Gary Wagner with the Gold Forecast. It is Sunday, 1:30 here in Honolulu, Hawaii. It is October the 24th, and it is Monday in Australia, first day of the trading week in gold. This is the Daily Report. Gold currently trading higher today, 1332.56, just coming off the highs. Very, very interesting scenario brewing. If you recall, we talked about on Thursday the fact that I wanted to take a serious look at a potential type of candle forming, and that's that long-legged doji. Well, sometimes you get what you wish for. We actually did get that. No, I say that facetiously, but realize at each of these bottoms here, we've had this doji-like character, and we can go back if we want even further. It seems to be a significant candle that is found at the bottom of the market. There's the first thing that lends me to believe that we have a potential bottom here. The second thing that lends me to believe we do have our bottom is this is that 50% retracement area, and as we talked about on Friday, that seemed to hold. I am looking to enter the market from the long side, either today or tomorrow. Aggressive traders who purchased back last week and bought in at 1345, when I issue the buy signal for conservative traders, as I said, I highly recommend that you dollar cost average. If you can, dollar cost average 2 to 1. In other words, for every 1 ounce that you got at 1345, you want to add 2 ounces here. I think that if we catch the beginning of this wave right now, my personal feeling and sentiment is we've got about a $100 move. And as you can see, there is my upper forecast and where I think this last wave, this impulse wave number 5, will take us to conclude this magnificent, absolutely brilliant run in gold. Traders, if you recall, we were talking about the fact that on Friday, when I started to do some relevant observations of the market itself, I had a absolute stunning discovery. And that discovery was that not only at these particular bottoms, here is the bottom of this C wave. These are the two ends of these impulse phases. And then if we look at the bottom of wave 2 here, and the bottom of 2 here, the bottom of 4 here, and the bottom of 4 here, you're going to see something very, very interesting. And that is, on almost all of them, you have a variation of a 3-river morning star. Now, what I mean by that is this. If you have a defined downtrend, and the market's been coming down, what tends to happen is you will start with a black candle on the pattern. In other words, another down day like this. Let me change that to black, traders, 1 second. And then you will get this black candle. And then what tends to happen is you get a doji-like candle. Now, that doji-like candle simply is significant because it's a consolidating candle, and it will typically make a new low, but at some point buyers enter the market and it closes very, very close to that open, and that's of course what creates that doji right in here. And then you've got the first beginnings. You've got really what is simply known as a doji in the morning position. The 3-river morning star, however, is really the completion of that pattern, because on the following day you get a red candle that looks something like that. And what happens is when you do that, when you get that candle, this gives you your 3-river morning, and then you tend to begin to move higher. And so this pattern here is a typical 3-river morning. Now, what we have noticed is that on these variations, for it to be a 3-river morning star, this open and closing area needs to be below the bodies of the candle before it and the candle after it. However, what I have noticed is that you get these variations. And what I mean by a variation is that what you see is the market will begin to come down in typical fashion as it's selling off. And then what happens is you get, rather than a doji, you can actually get a hammer that goes within the body, or you can get an inverted hammer that goes below it, so it's not actually in a star formation, and then you get that following red candle, but it's really not a star because the star has to gap below it. So as you can see, and the reason I point that out is when we look at some of these patterns, if I blow them up for us here, what you'll notice is within here, this isn't in a star formation, but it has all of those essential ingredients: downtrend black candle, small bodied candle, and then red or up day. So you get that significant downtrend and you get that pattern there. If we look at it here, again, you didn't really get a long black candle here, or a long red candle. You got it on the following day. So in a classic sense, it's not a three river because it took 4 days for this pattern to form. But again, you got that. And that's even on something with that small of a retracement such as we got in 2. Now, the most interesting one, of course, is this right in here. Let me just move these away for us. And this is that low around 1040. This is the conclusion. And this is a rather long day. What you see is that you had the black candle and you had a very, very long-legged doji, and then you had an inverted hammer and then the red candle. This is actually a variation off of what's called a unique three-river bottom. So what I'm trying to show you, traders, is that time and time again, we're seeing this pattern form at the bottom. It's a variation, but there is something that holds true with all of them, and that is you get your black candle down, that's your first one, the small bodied candle, and then top it off with a red candle moving back up in the market. It is an absolutely beautiful bottom indicator. Traders, we're simply going to wait for confirmation. If we get some kind of rally tonight, you can go ahead and enter from the long side. But as long as this market maintains, doesn't sell off, and we have a continuation tomorrow, we will be buying. This has been Gary Wagner with the Gold Forecast, wishing you, as always, good trading. We'll talk to you tomorrow on Monday. Bye-bye.